anyone wants to suggest something they want to look at, then that would be great. I'm just going to flick onto a chart now. I will cover the FTSE. Lots of traders in our academy know what I'm doing with this because I called it on the weekend. You should be in gains now, so that's really good. And by the way, we post our trading calls all day. Everything we're doing all day, we post it in our trading room with updates. I would say probably the most important chart at this point is your S&P. You can view this in many different ways, but the ticker I've currently got is from CME, and it's S&P 500 E-mini futures. Okay, so this is really great as a chart. I really enjoy this, and the reason why is very, very simple. It's because you are at the point where you have a very good choice to make. Okay, and there's reasons why you make it, but it reflects as a whole the idea of trading for income. It reflects what actually works as a process in trading. And at the end of the day, trading, as you know, and as I say repeatedly on a very frequent basis, is all about buying low and selling high. Now, the problem people have when they trade is they don't know how to view across time frames, okay, from their monthly all the way down to their 1 minute, if you like, how value is relevant to each set of data. Because at the end of the day, there doesn't need to specifically be confusion on time frames. Time frames are simply a way of seeing the same data. Okay, so believe it or not, this candle, for example, where I've drawn this arrow, represents the same data which you can see on your 1 minute. You would just have to zoom out an awful lot, you know, like if you're looking at the moon in a on a telescope, for example. You know, you can see a month's worth of minute data if you zoom out far enough. Obviously, on here you can't, more or less. I mean, you probably do it with logarithms or I don't know, something like that. But my point is, the same data, you need to understand the same data is on all of these charts. It's just a case of understanding how that data is arranged and how it's relevant to your indicators, because indicators are based off previous candles, and how it's relevant to what we call market value. Because market value, in a sense, buying low and selling high and getting those good prices like you would if you were deal making anywhere else, comes entirely into trade to time frames. Okay, so you could have market value on the monthly like you do here, but on your 1 minute and 5 minute you don't. So that's why people get confused, because they then say, well, how could it be that you could have those different things on both? And it's quite simple, because you might have a low price or a high price for a relevant period of time. Okay, and the point of time frames is exactly that. It's to cater for all kinds of traders, people who want a good deal in the next 5 minutes, or people who want a good deal in the next 5 months. So what I've got at the moment is a chart which represents those who want to have a good deal within monthly periods. In other words, probably an extended period of time. There is, of course, the anomaly that could occur, which would just slap you down in 1 month, right? But you can see rarely that is the case. Now, what you had, and I've gone over the story of this a billion times, because this monthly chart doesn't move an awful way over the years. If you really think about it, what you can see here is not like a massive swing one way or the other. But anyhow, you had COVID, massive V-shaped drop. There'll be lots of people who took it long in line with previous price action here. Okay, you had somewhat of a market maker stop. And just as a point as well, there's no coincidence in this 100 MA. Okay, it drops there, and it flies up long. That's not really something that just happens. That shows you a little bit about how markets coordinate within time frames. Okay, because on a higher time frame, you fell to what was, fairly considerable support, let's say, because you bounced around here for probably over a year or two. Okay, so you flew up on extreme strength. People rushed to buy, and then ultimately up here was your strong market value for those long-term traders I was referring to, people who are looking for that long-term good deal. So at this point, we're not looking at the 5 or the 15-minute chart. We don't really care too much about where that's going to go, although it does help us get a good entry. But we were looking at this point for a considerable drop. Okay, and that really brings the basis for fib levels, because fib levels tell you how far something has gone or is going. Lots of people treat fib levels as like a ping pong table, if you like. You land on it and then it gets pinged back as if by magic. It's not particularly the case that occurs. Okay, so for me, and what I was saying to all my members at the time, is that around the 50%, okay, I'm looking for key support because I want an area that is going to be viable for new longs. And the reason why I'm doing it at 50% is because that is where I'm going to attain that long-term value. Okay, because I can see, if I use a ruler from here, I can see that if I buy, for example, up here, it's going to be a little bit early. Okay, and if I buy down here, it's not extremely early, but it's okay. But you really only get the best deals when you're getting down here. It's a bit like waiting till Black Friday in a way, or some kind of holiday series or Christmas, if you like, where all the prices change based on supply and demand. You know, the shops want to get the most sales, so they put the price down, people buy. I mean, you've got something fairly similar here. The prices come down, and then you get the larger money market buying back up. Now, it's likely the case that if we get back here, I'm going to do the same thing. And the reason why I'm going to do the same thing is because I've seen it happen. I had the opportunity to do it here. I had a long bias here, okay, and I called that on my TradingView account and on YouTube and everywhere practically to my members who asked me about it at the time. And it was great. You know, it rallied and rallied, and you could have bought it several times on each dip on lower time frames. Remember, we would swap our time frames because we're looking for those nearer term moves to build up that overall swing. And it went up and up and up. So let's put it this way. We know markets repeat very well. We had rejection here, we had rejection there, and rejection there. So what are you going to do when you come up here? Okay. Now I'll give a second for anyone who wants to tell me, but it should be quite obvious. This is not a 50% retracement, okay? You've now come all the way back, 100% of the previous move. Now, there are many people, there are many traders and investors who think that the S&P will get up here and up there. And believe it or not, I'm one of those people who thinks that will happen in the future at some point. Not soon, okay? I think it could happen soon, but there's no way I'm buying up here. There is no way I'm buying because I can see last time it caused a massive smoking to the downside. Okay, and everyone who is the smart side, people who make money, people who know how to get good deals, just like they do at the car dealership down the road, who buy the cars for less, sell them for more, has the opportunity to do exactly that. And the beauty of trading online now is that's open to everyone. Before it was the case that, you know, you'd have to dress incredibly smart and you couldn't really be in the comfort of your own home. You had to be in an office in the city or something, and it was open to people like that, you know, and there was great barriers, but that has now been removed so that you can be a deal maker as well, as many of our academy members are. Now there's tons of people coming in here, so I'll continue on my S&P just to say, if you can smash that boost button, that'd be great. If you can ask me a question, it would be even better. And thirded by that, if you want to learn to trade live with me on charts in about just over 2 hours with another pro trader with tons of experience, you can get it there. Okay, go there and we'll be teaching today and we'll be doing 2 or 3 hours every single day, every single week. We did 15 hours last week live explaining how we're trading for income, why, what trades we're taking all day. So if you want that, it's a bit of a 2-in-1 really. You know what we're doing and how we're doing it. Free training also is there for anyone who wants to learn a bit before they do this. But I would recommend getting on board as soon as possible because we're going live later and we will be all week. So the point I'm making with your S&P is you've got to always be aware that you can go higher. Don't pretend this won't happen. I'm not saying it's such a good deal to the short side for no reason. But like gold, you can get higher, and that's completely on the table. But I would rather sell here because statistically, I've got a place where we've fallen before. I know it's a high price. I'm not going to pretend particularly that it's the be-all and end-all. I'm not going to pretend you can't get any higher. I just know if I'm a deal maker, as traders are who make money, then I'm looking for high prices to do that. And you may find after the inflation data later that you get some kind of comments that pull the market down. As an exit, I would prefer it at what I would call long zone 1 for long-term swing traders. This is my ideal area, and I wouldn't be shocked if your MAs return up. You know, all our Academy members will know how we use moving averages specifically, but I wouldn't be shocked if you get something like that ultimately. Nonetheless, I cannot buy this. The price is simply too high. Okay, if I want to buy, it's got to be lower. I want a deal. I want a deal that is very, very viable for the long term so I can make money. And I'm just not going to get it where we are now. I'm going to get a very poor deal. All right. I think the market could go higher, so I'm ready to DCA. I'm ready to add and scale in further periodically, spaced out with light sizes. That's why I don't use a stop loss, because if my size is light enough compared to my overall equity or capital, then I shouldn't have an issue. If I've got a diverse portfolio and I can hedge in between for gains to mitigate loss. You cannot hedge on your own. It won't work. Please, please, please don't go and try that on your own, because I can tell you now, you will struggle. Okay, it is very, it's got a sort of, not exactly a knack to it, but it has to be quite in depth, and it's a skill you acquire over time, as our Academy members and now find.